Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello, welcome to Zak's Traders Cafe. Today I'm joined by Alexander Shaw, who's CEO at Landore Resources. How are you today, Alexander?
Hi, Zach. Thanks for having me, and great to talk to you.
Right, the backdrop to our interview is that gold is probably like now $5,000 an ounce and going through the roof further. There's a commodities crisis in terms of, in the wake of the tariffs, the dollar collapsing, this, that, and the other, Trump being completely crazy, all that sort of stuff, which should mean it's a perfect time for a US-based gold explorer developer. Is that the case, Alexander?
Yeah, absolutely. I mean, we're very excited. We just came out with our new MRE. So having 656,000 ounces in a pit optimized resource is great news. I mean, in addition, our B-47 and VW copper-cobalt nickel PGM ore bodies have also grown substantially. So as you say, Zach, in a high gold price and also, kind of the mad rush for critical minerals, we really have a fantastic project here.
Right. So you proved what you got under the ground, and which is obviously a big thing. You come back from suspension. The shares were basically at sort of 1 year lows around 2.3p, something like that. I can say it, but you can't. One would have thought this is a no-brainer at current share price levels and a modest 10 million market cap.
Yeah, look, I mean, we're fantastic value for money. Kind of, I think that the share price doesn't reflect the ore body and the resource that we have. I try to explain where we're sitting right now. There was a sort of, let's say, a disappointment around the resource reducing from 857 to where we sit at 656. But really, that's part of the refinement process. I mean, the numbers that came out in 2022 on the PEA were, kind of, let's say, in a different pricing environment, operating costs and everything let's say goes into optimizing the pit have gone up substantially. We're looking at a 25% increase on those costs. So despite the gold price going up and us, let's say, looking at a lower cutoff grade to accommodate that gold increase, we had to trim quite a lot of ounces out of the pit just because they're not economically viable. And the model also showed that some of the, let's say, the projections, be it to depth and also along the mineralization structures, were maybe a little bit optimistic previously. And I think that that's just, as I say, part of the refinement process. The more information we have on the ore body, the better we're going to get at proving, let's say, the consistency of the mineralization and really getting the confidence up. We're now sitting at 95% in the indicated category, which is amazing.
But I mean, just as sort of being a sort of on a sort of more distant view, as just an outside observer who's keen on the story, let's say you've had some of your MRE shaved off compared to what you said before, but gold has doubled and tripled in the meantime. Who cares?
Yeah, exactly. I mean, what we've shown is that on the eastern side, there's huge opportunity for expansion. We're sitting on an orogenic belt that we have over 40 kilometers of strike on. We've only looked at one little structural zone of accommodation. We have at least two more structural targets moving east, and both of them have significant scale and opportunity. So, we've always said that Junior Lake was going to be a spoke and hub type operation. The fact that we've reincorporated Limon as well. Limon, it's not the same greenstone belt, but it's a banded iron formation. There's plenty of gold in it. We know that. So really, what I've always said I wanted to do was go back and reassess the technical merits of the project. And I mean, it's a fantastic project. We're reassaying a lot of the historic core because the process has shown us that the mineralization is not necessarily just associated with the metasedimentary units. It's leaked out into the surrounding geology. It's structurally controlled, so we understand the structure a lot better now. We understand, where some of these high-grade shoots that are coming out of the primary structure sit. So all of these things just are complementary to refining and basically moving this towards something that is really, really significant.
Right, so the shares back, let's say they're back where they were back in August. At that time, I'm trying to look up where gold was, but you see where I'm coming from. It should be the case, I suppose, that if shareholders are already in the stock, maybe they would be thinking of buying more potentially, and also people think they missed the boat on gold stocks and gold stocks going up. Maybe you would be somebody to look at.
Yeah, look, absolutely. As you say, Zach, I mean, we're a bit of an outlier. We always struggled, kind of, let's say, to get a realistic valuation because people did query our resource. We now have a resource from, a tier one resource consultancy in Canada. SLR are globally known, for being a conservative, very, very well dialed into Canadian geology. Reno Prisako, who did the resource for us, is an expert on Ontario gold systems. So we really couldn't ask for a better endorsement as far as kind of confidence goes in what we have. And as I say, the fact that we have 656,000 ounces, 95 of that is in indicated, sitting in Northwest Ontario, very accessible, very good relationship with the First Nations. We've got an environmental baseline study that goes back to 2010. So, we've also got mining permits on the property, which give us 20-year, security of tenure on the mining side. It's all, the stars really are aligning here as far as kind of, where the value should be going.
And just to finish, I mean, I was trying to find the price of gold in August. It was $3,300 an ounce, so it's just obviously just nearly 51 at the moment. So we got the same prices then. I'm sure if people knew that in August that gold would be 5,100, they would have this time they would have filled their boots. But just finally, is there any? I mean, you've got the sort of the resource estimate there. Is there any idea that you would have about what the cost of production would be, or is it just too early for that?
Yeah, it's a little bit early. That's one of the things that we're looking to do, and at the right time, we will update the PEA because let's say, there were a number of question marks around the PEA that was done in 2022. What I'd like to do is really expand the resource, to something which is, let's say, far more consistent with a PEA in Canada. So we'd probably look at being well over 1 million ounces in the M&I categories before we redo that PEA. But look, I expect, mining inflation is going to kick in. Previously we were looking at $1,800 an ounce, sort of all-in cost. So I'd imagine that's going to creep up a little bit. But still, I mean, it's fantastic value for money.
Alexander Shaw, CEO at Landore Resources. Thank you very much indeed.
Thank you very much, Zach.